Inflation, mortgage rates, low inventory. We'll cover that today on your February 2022 real estate market update. Hey guys, Chris Elliott, the Elliott Real Estate team over here. Good morning, good afternoon, good evening, whatever time you're seeing this. Super excited to be bringing you this information. If you would, like, subscribe, all that fun stuff for the algorithm, I appreciate it. All right, so let's just jump right into it. First and foremost, we're going to be talking about inflation, what everybody's talking about, what you're seeing in the news, okay? I'd like to give you a friendly reminder that real estate ownership is one of the greatest hedges against inflation. Don't believe me? You could take the quote from Mark Cusson of Investopedia. Real estate is a time-honored inflation hedge. Keep in mind, guys, we're buying a fixed price asset at a fixed interest rate with fixed payments with leverage, meaning like you're putting 5, 10, 20% down and you're getting the benefit of all that extra equity. So when homes appreciate 18% like they did last year, you're not only getting an 18% return on the money you put into the deal, aka your down payment, you're getting an 18% appreciation rate on the full value of the home, which is absolutely insane. That leverage doesn't exist in many other asset classes. So something to consider with regard to real estate. Interesting graphic that I thought real estate has either kept up with or outpaced inflation over the last 50 years. Real estate absolutely kicked inflation's butt in 2021. We'll see what happens in 2022, but I thought that was pretty interesting. Another interesting tidbit that I'll throw in there, because we love giving bonuses, they recently did a study of 100 real estate economists, people that studied the real estate market professionally, full-time, like that's their gig, that's their job. So they surveyed 100 of them. The pessimists, meaning the folks that were least optimistic, that's the definition of pessimist, said that they were projected to see 24%, an additional 24% of appreciation through 2026 over the next 4 years. The optimists were at 62%, meaning that we're going to see another home values creep up another 62% over the next 4 years. Either way you slice that, we're going to see continued appreciation over the next 4 years, which is really good for anybody planning to buy a home or anybody that owns a home. You're going to see more equity. You're going to see more wealth growth from your home. Pretty cool. All right, next let's talk about mortgage rates. So to understand mortgage rates, you really need to understand the 10-year treasury rate and their symbiotic relationship. So the federal government does not control mortgage interest rates, but they can influence it through the 10-year treasury yield. So like I said, there's a symbiotic relationship between those two. For the last 50 years, there's been an average spread of 1.7%, meaning that whatever the 10-year treasury yield is, usually you can tack on another 1.7%, and there is your 30-year fixed rate mortgage kind of average right there. So 10-year treasury yield has been climbing over the last few months, and really what this is the Fed is raising raising that because we're coming out of a pandemic. The economy, despite what you might see on the news headlines or the clickbait headlines, the economy is improving as we head out of kind of the freeze, the shutdown that we saw through the pandemic. So we are currently back to pre-pandemic mortgage rates right now. You might have heard that rates have been jumping up. But keep in mind, guys, we're just back to basically where we started when this whole thing kicked off. And even with rates climbing, we are still at historic lows compared to the last 50 years. Context is everything. Talk to anybody with a little bit of gray hair in their beard or in their hair. They will tell you that even with rates climbing up a little bit, it's still very cheap money in the grand scheme of things. So let's jump into your Richmond housing market specifically. The story of the day is low inventory, which has been the story the last couple of months, but it has continued. So if we look at the months of live inventory, at the time of this recording, we don't have January's numbers just yet, but we are looking at December of 2021. December of 2021, the months of live inventory was 0.5, and really what that means in layman's terms, that at the rate at which homes were selling, if nothing new hit the market on December 1, it would have taken us 2 weeks to sell out all the inventory in Richmond. I'll say that again. If nothing new hit the market at December 1, based at the rate at which homes were selling, it would have taken us until December 15th to sell out every single property for sale in the Metro Richmond market, which is absolutely insane. We are still in an incredible seller's market. And interesting enough, December of 2021 was the best time to sell, was the hottest seller's market or the hottest month in the whole year of 2022, completely shattering the conventional wisdom of seasonality and that the winter's slow and spring's the time to sell and all that nonsense that Grandpa has been telling you. So that is that. What does this all mean for you? So for sellers, I got 3 points for you as always. We already kind of hit on it, but forget traditional seasonality. The whole like, hey, the selling season is February to August. That is completely out of the door. You know, a seller's market or buyer's market is a functionality of demand and supply. Right now, supply is really low, historically low, demand is historically high. So it's a good time of year to sell at any time of the year, really, and it's almost irrelevant. Point number 2, marketing matters. So, you know, I'm telling you, we're in a hot market, which we absolutely are. The shame that we're seeing, the travesty that we're seeing is that there's sellers that are just throwing their homes on the market. They're selling quickly, they're selling with multiple offers. Unfortunately, the reality is with a lot of them, they're kind of getting lazy in the preparation of the staging and the proper marketing and doing all the things that we typically do to get homes sold. All those things you don't necessarily have to do to get your home sold right now, but that's not guaranteeing that you're selling it for the highest price possible. So if you're somebody out there that's looking to squeeze all the juice out of the lemon and really get everything that you can out of this market, make sure you're doing the proper steps and doing the proper marketing to get that highest price possible. Last but not least, favorable terms are available upon request. What I mean by that is if you are somebody that needs to sell your home and maybe you need to buy another home or you want to sell but you don't want to move until the summer, realize that buyers are being very flexible right now. They're willing to offer you pretty much any term that you could ask for just to get your home under contract. So there's a lot of flexibility for sellers available that maybe you haven't seen the last time you sold a home or historically we haven't seen. So that's that. For our buyer folks, cash matters. So the more cash that you have to play with for your prospective purchase, the better you're going to be, the more favorable you're going to look to a seller, and the more guarantees that you can offer, i.e., you know, waiving the inspection, waiving the appraisal, things of that nature. So there's a lot of different things you can do to get your hands on cash. You can take an equity line out of your current home if you're selling and not buying. You can get gift funds from a family member. You can take a margin loan against your stock portfolio. You can do a bridge loan. But the more cash that you can get your hands on to inject in the transaction, the higher likelihood you're going to have success actually getting a home under contract. Long term, you're making out. So we've had a lot of buyers that have said, hey, I don't necessarily want to buy right now because, you know, prices are inflated or it's a seller's market and now's not a good time to buy. Realize what we just told you earlier, that even the pessimists are saying we're going to see another 24% appreciation. So even if you feel like you're overpaying for a home right now or you're having to give up your firstborn child to get a home under contract, realize you are going to be making out, you are going to be winning long term, because that long term appreciation is going to erase anything where you feel like you're overpaying right now. Last but not least, it's only getting more expensive. So we talked about it, rates are on the rise, prices are going to continue to appreciate. So if you're somebody that's on the sidelines or thinking about putting yourself on the sidelines because it is such a seller's market right now, realize that you can certainly wait, and we're not going to pressure you to buy if you're not ready to buy, but realize if you wait to buy in the next 2, 3, 4 years, and who knows what's going to happen after that, but it is going to get more expensive. The prices are going to continue to rise, and the cost of buying a home, i.e. your interest rate, is going to continue to go up, which is going to continue to make it more expensive. So hope all that made sense. If you have any questions, comments, thoughts, fears, political opinions you feel necessary to express, go ahead and throw it in the comments. Thank you guys for tuning in. Look forward to seeing you next month.